Okay, this episode now involves issues in dealing with how to bring money into your SMSF and how to add money into your SMSF. Now, please, I need you to be very wary in the fact that this is not a substitution for financial advice. It is purely for educational purposes, like a how to set up an SMSF and how to manage and operate an SMSF. So please seek advice from your professional accountant or financial advisor to see if this is going to benefit you in the long run. Okay, so bringing funds into the SMSF, there's different ways of doing that. One is, I would assume that you guys as employees or business owners would have superannuation money in the different superannuation funds, one or a number of different superannuation funds out there that you have contributed money into or that your employer has contributed money into over the past years. Now, what you'll need to do if you wish to transfer these funds across to your SMSF, the very first thing you need is a bank account in your SMSF. So having set up your SMSF and received all of your documents, you can then go to the bank, whichever bank you prefer, and have a business bank account set up in the name of the trustee as trustee for ABC superannuation fund. So, for example, the bank account name should be ABC Pty Ltd in trust for or as trustee for ABC superannuation fund. Having set up this bank account, then you will need to go through any superannuation funds in which you have money already there. If you don't know which superannuation funds you have money there, you can easily log into MyGov using your individual online services and look at what you have in super. Now, you'll need to obtain a form for transferring funds from your superannuation fund to your SMSF, and that's usually quite simple. If you know the super fund that you were previously with, you can go onto their website and search for a transfer of superannuation funds form, or it's what we call a rollover. Basically, that's the proper term that you will need to use. Rollover of funds. So once you've obtained that form, you fill in your details. You fill in the amount of the funds that you wish to roll over from your existing super into your SMSF, and then you would provide your superannuation fund with your own SMSF details. Usually that will comprise the name of your SMSF, your ABN, and usually if you want a electronic transfer rollover, you can add your SMSF bank details. However, I think usually your super fund will provide a check in the name of your SMSF so that you can go and bank it. So that's one way of bringing money into your super SMSF without having to make contributions. You bring the contributions that have already been made into existing super funds and roll over those amounts into your own SMSF. That's usually how an SMSF is started. And that's usually the first lot of transactions that come into your SMSF. Now, throughout the year, when you have set up your SMSF and brought the funds from your other superannuation funds into your SMSF, the other ways of adding funds is by way of employer contributions. So if you are an employee and your employer was previously paying your contributions into another super fund, you would need to notify your employer of a change in your super fund. And in that case, you can provide your employer with a BSB and account number of the bank details of your own SMSF, so that every quarter when your employer pays the compulsory contributions, they will come into your SMSF rather than your existing fund. The other way is if you are a business owner or a director of a company, you can at any time choose to contribute money into your SMSF. But bear in mind, you can only contribute up to a concessional amount of $25,000 per member. Now, what do we mean by concessional amount? This is a contribution where the person who contributes to your SMSF is able to claim a tax deduction for the amounts contributed. And the cap for this is $25,000 per year per person. So if you have 4 members in your SMSF, you can contribute, and they all work in, for example, in a family business that you own, you can contribute up to $100,000 and claim those as tax deductions in your business return. However, these contributions are assessed in your SMSF and they are taxed at 15%, which is the concessional tax rate in a SMSF. So the one way of adding funds in is by way of concessional superannuation contributions. Also, in terms of concessional contributions, if you are an employee, your employer would pay 9.5% of your total gross wages. You can also choose to add extra contributions up to $25,000 and claim those as a deduction in your tax return as an employee. So this law has been around since around about 2017, where you are able to do that. Whereas prior to that, you only were able to claim a tax deduction on concessional contributions if you were a sole trader in your personal tax return. But now it's extended to employees, which is good news. It's encouraged that you would contribute to your super and have funds saved for retirement. The other way of bringing funds into your SMSF is, again, if you have 4 members in your SMSF, you can add extra contributions, but this is what we call a non-concessional contribution. So these are usually amounts after tax that you would put in as extra contributions in your SMSF, and so you cannot claim a deduction on these. And that's why they're called non-concessional contributions. Now, when you make a non-concessional contribution and your income is within a certain threshold according to the ATO will provide, also pay you a co-contribution. It's called a government co-contribution. Now that's up to $500, provided that your income is within a certain range. But going back to non-concessional contributions, how much can you contribute? Well, in past years, you were able to contribute $150 or even $200,000. But let's talk about today, this year. How much are you able to contribute? Well, per person, it's $100,000 per year, or you can use a provision in the superannuation laws where you can contribute up to $300,000 for a period of 3 years. So, for example, if in year 1 you contributed $300,000, you cannot contribute any more funds until year 4. That goes for all members. So if you have 4 members in your SMSF and you have a whole heap of money saved up from past years, you can contribute up to 3 4s, 1.2 million, and you won't be able to contribute any more funds until year 4. So you can use that provision to boost your SMSF funds and to be able to invest in high-geared properties, invest in assets, in properties which have a large turnover amount, and that way it will service your SMSF very, very well and will provide you with a maximum potential benefit. So these are ways in how to bring money and bring funds into an SMSF. One way is by rolling over any of your previous monies, of your monies from previous super into your SMSF. And number 2 is contributions, concessional contributions, which you can claim as a tax deduction, and that way the SMSF will be taxed at 15% on those contributions. And the other type of contributions, non-concessional contributions, and generally you can't claim a tax deduction for that. Now, if you have a spouse and you're both members of the SMSF, you can also make spouse contributions, and there are provisions for that on the ATO's website, and provisions for that in the superannuation laws. But these are just some basic ideas in how to bring money into a SMSF and how to continue contributing into an SMSF. So that's the end of this podcast episode. So stay tuned for the next episode, where we'll take you through what we call an investment strategy. If you want to do a bit of research and look up as to what an investment strategy is before listening to the next podcast, feel free to do a search on different types of investment strategies. But I'll just guide you through the key concepts and what needs to be included in an investment strategy. Stay tuned.